Good morning, everyone. Hope you just to let you know the trades that I put in. I don't show the trades in here other than if I show the chart setup. So just to let you know. So good morning, YouTube live room as well. So what are we doing in here? Well, right now, what we're doing at this time of year, we're looking at the garbage stocks. So just keep that in mind in there, but the garbage stocks that are actively traded. So definitely keep that in mind. So we have a big list of them, but the key is you have to buy them when they start moving. Now, the problem with like an ACHR, we've been playing it a lot against the companion stocks. Just like AI, if AI is going up, then probably SoundHound's going up, which means BBAI is going up. So BBAI, we were in down here. We didn't get back in here, my mistake. But we made in a lot of companion stocks to ACHR, whether it was Blade, AISP, a number of them. So we like doing the companion stocks and then combining it with chart patterns. So just keep that in mind in there. So what do we do now? Well, number one, you definitely see divergences with the Russell and the Dow Jones transports, but definitely keep in mind that at holiday time, that can go on a lot longer than you ever imagined. So just keep that in the back of your mind. So that can go on a long time. But I thought what I do, because a lot of people ask, keep in mind one thing about sentiment, about MACD, all that. So the biggest thing is those can go on longer than you imagine. You need to have 3 reasons, in my opinion, to do trades. So just keep that in the back of your mind. So the first thing I thought I'd do is I'd show you what we were talking about on in the room yesterday and what I showed on Stock Twits. I have like 56,000 followers. That's pretty cool. So Bollinger Band pinching, but it doesn't mean a crossover yet. It's a warning sign. This is what I thought you'd like to see. Yeah, I forgot to put an S in here and it doesn't let you edit it. But 6 big trader mistakes. One of them is averaging down. In this market, yeah, you get lucky. So you buy something here, you buy something here, you buy something here, it gaps up, and you look like a genius. In the long run, that doesn't work. Buying just something's at the lower Bollinger Band. So I'll just show you a number of these and show you what we're talking about. So I think Lorna agrees with me about that averaging down. I like to buy on the way up. So just to let you know, look at NVIDIA. Here's a perfect example. If you want to buy NVIDIA today, definitely you see the diamond. So different patterns start working. There's a diamond. We've seen it in a lot of stocks. It's in an uptrend. So that if it gets oversold, like here, you don't buy it here. You buy it on the inverse head and shoulders. You buy it on the way up. Then you use what Raghi talks about and TG about the 20 moving average. I don't use it on the way down, but boy, it keeps you in on the way up. So I like it on the way up. ATR trailing stop or the 21 EMA or the 20 SMA. Totally understand about that. So it keeps it in the trend on the way up. On the way down, I'd rather use the ATR trailing stop to keep you short. So just keep that in mind. On the way down, I like looking at multiple bottoms. So if you see some twerks to the downside, that to me is your first sign of support, not moving averages. As you see, it blew through them all. Also, that day, not only did it go to there, but while the old market was having another leg down, this held up like a champ. That was our big ticket. But there was a great move. That's 6 points. So just keep that in the back of your mind that we like buying on the way up. But I want to go over some of the things I was just saying. So number one, definitely I look at this. I look at like Citigroup, Panic Euphoria Index has been off the scale on the upside for weeks. And the markets have still gone up. So sentiment, you can't just take that. in there like at face value. So first things first, if I want to talk about averaging down, how do you average down here? You don't. I like to buy on the way up. I've seen too many people blow out by buying on the way down. So just keep that in the back of your mind. Second thing, I love going over this one. This is your Bollinger Band. So we're going to take this as just the Bollinger Band. So here's another way in 44 years I've watched people blow out. SPX. Yeah, you see how it's at the upper Bollinger Band and stayed there. It's the break in the consolidation. So let me just show you, because check that out. I watched a lot of people blow out right here. So you could go back 30 years, and it works the same. Works the same. That upper Bollinger Band, you don't buy. Look at this. If you bought on the lower Bollinger Band, you get yourself destroyed. You got to combine it with things. So that's number one. Number two, and I think you see it in here, the rising wedge. How many have heard that, oh, markets have a rising wedge? Well, they've had a rising wedge all the way up. They had a rising wedge back here all the way up. It's the break and how it works off the oversold condition that matters. That's why I add a MACD. So you got the Bollinger Band, you got the averaging down, you had the rising wedge. There's another one. How many of you on internet have read about this one? This is one of my favorite, that the S&P is rallying on light volume. How many have heard that one? So how many have heard that one? Well, I bet a lot. S&P is going up on light volume. So let's go and show you. So I'm going to clear all the drawing set, and I'm going to show you this. So, and I want to go over volume also. We have a lot of time in here. So here you go. Light volume. Now look at that. Light volume all the way up. All the way up. So how about here? Light volume all the way up. Yep, I heard it all the way up. Light volume, light volume, light volume. It just, things can go up on light volume. So keep that in mind. Also, how many of you have heard, and I'm going to revisit volume in a different way. How many of you heard that Amazon had too high a PE or too high a price to sales? How many have heard that over the last 20 years? Well, a lot. A lot. Just keep that in mind. High growth stocks are going to have high PEs. So just keep that in mind. So I have made the mistake. Don't think I'm Mr. Perfect. I have made the mistake of shorting Outback Steakhouse when it had a high PE when I was on the CBOE floor. So, and I lost money. So, because it was a high growth stock. Same with United Surgical. So don't short something just because it has a high PE. Don't buy something just because it has a low PE. So just keep in mind something like AT&T. Here's another one I should have put in there. It eventually started working. But back here, yeah, it has a high dividend, and it just kept going down. So that's another one I didn't put it in there. Eventually that works, with a high dividend. But I just wanted to tell you, I didn't put that in the top 6. What else did I put in there? I put in overbought. That's my 6th one. Overbought in an uptrend does not mean to short it. Look at this. Overbought, and it kept going. So overbought in an uptrend. I use an uptrend as the 50. You can use the 20. Whatever gets you to the end zone. The key is overbought in an uptrend is not a short. Just keep that in mind. Oversold in a downtrend is not a buy. So you got to know when to use the MACD or the RSI or the stochastic, whichever one you use. So just keep that in mind. So those are 6 of them for you. 6 little trader things. So keep that in mind. Now, I want to go over a couple of other things that I think are pertinent. Now, in this market, somebody just mentioned this stock. I have no idea what this stock does. So, AppLovin, isn't that the name of the guy from Superbad? No, that was McLovin. Okay, but we were close. The key in here is when something gets this far from the 20, that doesn't mean it's going down. It usually means it stutters so the 20 can catch up somewhat. Too far, it stuttered. Guess what? It stuttered here. So just keep that in mind in there. And that's why in Meta, that's why we weren't chasing. Somebody asked, why aren't you buying the breakout today? It's not a breakout today. It was a breakout here. So just that's another thing to keep in mind. So now you might say the breakout was on light volume. Well, volume I found works better at exhaustion times. So if you see something go up for a long time and then have a massive candle on massive volume, yeah, a lot of times that's the top. That's the top. So, or the bottom for that matter. So it can break up on light volume like here. Remember another thing, that's holiday time. You're going to have light volume. But the key up here is look how far it is from the 20 moving average. So I don't chase when it's that far above it. So in fact, like I said, that does not mean to short it at all. It just means let it settle down, and I'll show you. So we're going to go into here, and I'm going to show you again. And I'm just going to use the purple line, the 20 moving average. And we're going to use this on a daily. So you'll see it, whether it's American Express, whether it's JP Morgan, whether it's a tech stock. It's all about probability. Darn right, I might get out too early. Yeah, like SoundCloud, SoundHound. Sure, I could get out too early, but it's just all about probability. So let's go into this and I'll show you. So here is American Express. Every stock has its own signature. This stock usually is about 6% over its 20. See that? Almost every time, 6%. Look at that. So what's that mean to me? It means all the public gets caught up with buying it because it broke out. This stock has a habit of reverting back to the moving average. Look at that, between 6 and 7%. Like I said, that doesn't mean to short it. There you go, 6%. It's futzing around. It's waiting for the 20 to catch up. That's all you're doing. It's waiting for the 20 to catch up. That's all it's doing. But every stock has its own signature. Too far away, it catches up. So that's the way I look at it. Even a SoundHound, maybe it gets too far away, but maybe it gets too far away a lot. That's a lot. Yeah, I wouldn't buy. You can buy it if you want. I just, how far has it gotten before? Oh, there you go. It's gotten 164% over its 20. So you're there again. So like I said, every stock has its own signature. On a breakout, it's going to get extended. That kind of breakout on a momentum stock. So definitely keep in mind the perspective of these and how we do them. So, and that's why something like ACHR, I couldn't buy it up here. It was just too darn far away. So now it's getting oversold. Even though that volume was high, it got oversold and it tried to get to the 20. So those kind of things to me are a big deal. So, well, Meta so far, we'll see tomorrow. But the whole key is they get too far and you got to know the stock. So, and you have to know the kind of market you're in. But on a stock like Microsoft or Meta, you can see the signature. Look at this. There, 5%, 5%. Isn't that amazing? Almost 5%. And survey says between 4 and 5%. So this one is between 4 and 5%. Look at this, all the way back. 5%. Between 4 and 5%. Like I said, that doesn't mean it's going down. It just means a lot of times it reverts back to the 20. It also means not to chase it. Wait for it to catch up. That's all I mean. Wait for it to catch up. So like I said, every stock has its own signature. So how about Amazon? Well, in fact, this is why we're in NVIDIA. All those other stocks were incredibly extended over their 20, and NVIDIA was under it, and it had a diamond formation. So I know a lot of times I talk about bear flags or Brecher ledge, which is after a sell-off, a horizontal bear flag. So where you can connect a lot of lines and make it horizontal. But in this market, we've seen two signatures. We've seen this kind of house or diamond, that kind of consolidation. Over 80% of patterns are consolidation. So all these sites you see where they buy on the way down, just keep in mind, 80% are consolidations. So just keep that in mind, and that's why we play consolidations. So you see the diamond, you know it was under the daily. You see it's under the daily, why a ton in that group are over it. And as you see, it worked. So that's pretty exciting to have more than one reason. Diamond, the rest of the group was over the 50. Well, those are good reasons for me. So just, that's what I watch. Now, the next thing I thought I'd go over is volume. So this is what I mean. I mentioned it sort of, but I want to show you what we're talking about. So a lot of times when a stock has had a tremendous, not really meta, but let's take, you can even take Tesla. So we've seen this before, that when this stock, here it is, too far from the 20. But here we go. It rallied on light volume. Yeah, I can always rally on light volume. The way I look at it on the upside is if a stock has had a protracted up move and then has massive volume, and then you look for a reversal candle, it does not mean to short. So just keep that in mind. On the way down, the same thing. So you could probably take Tesla. Let's go back and look. There. Down, 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 down. Panic selling. Followed by a reversal candle. Right here. So we can actually take the rewind function and go to the beginning of January 23, and I'll show you. So here's January 2023. And as you see in here, the stock went down, 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 and then had this, like, to me, it looked like capitulation, but really, that's really not enough. But it did form a bottom. So if you take non-24 hour, non-volume, you see the inverse head and shoulders. So like I said, diamond formations have been working lately. Also, Stewie patterns. When something goes down, like here, and then you can highlight it, it looks like Stewie from Family Guy. I know that's being ambitious, but sort of an inverse head and shoulders, and then you buy on the break. Like I said, you buy on the break here, it kept going down. So how did you combine it? You buy, and I'll show you. If you want, I'll be happy to show you. But this is how we've made money and how I have over 44 years. You look for the inverse head and shoulders. So if you're near support, you look for the reversal pattern. After a big move, it usually takes a while for that reversal pattern to work. Then you look for a cross of something, whether it's a 20, whether it's a 50, and the ATR trailing stop. So you got the break above here and the consolidation. That's your buy right there. The break and the consolidation. If you think that looks like that's a one-off, go look at ACHR on the break. The break and the consolidation. The big old this. Actually, that was even better, but you broke in the consolidation. So I'm just telling you, that stuff works. The break and the consolidation. If you want to buy on the way down, go for it. I'm just telling you, in the long run, I haven't seen that work. In the short run, sure. So, just that's how I look at it. So volume does matter, but I have found that volume overall is not as important as the chart pattern. So that, we're in incredibly speculative time. So we can look for speculative stocks. Here's one in GME. Now we got out today. How is that called, Jack, and GME? Getting out up here. We got out right here. Right there. So now, though, let's go and analyze this sucker. So we're going to take this. I'm going to take off the volume on the left. So we're going to go. I'm just going to put my normal setting. I want to show you GME, because it might be setting up. We're in a speculative time. Obviously, it's gone down. It's near support, though. There was a quasi diamond. So in fact, let me just show you. We're going to clear the drawing, and there's a diamond formation. I know that's sort of ambitious calling that a diamond, but it worked. So you respect the consolidation break in either direction. There's a diamond. Just respect the break in either direction. And as you see, they worked. What do you do now? Well, it's at support, but you haven't really gotten that reversal yet. Now, if you're day trading, are you seeing a reversal? Sort of. The only problem is you have all those people that were hooked right here. That's the only problem. You have that resistance. So I would rather see it get pounded and have no resistance if it starts turning. So it's going to be a little tough to reclaim all that. How about on a 15-minute or a 30? Well, you see all the resistance now. And this is where people get annoyed because you say it's a better buy above here. This is stuck at 27.5 like 10 times. So if it gets over that, then 27.5 becomes support. Now, I know it's hard when it's 26.5. So in this environment, yeah, maybe you could go buy a 26 for tomorrow. But I don't have enough reasons. It's got too much resistance now. So that's where I am. So that's how I'm doing it. So I'm taking whatever chart pattern is working at the moment. So what do I mean by that? Well, you saw the diamond working. Well, we have a new pattern. Our new pattern is the rally and the hook. So you get the rally, you get the hook down to support that gets oversold. We have seen this work on a tremendous amount of stocks. CRSP, not now. I'm talking about the rally and the hook to support. And it worked. So now, how do you scan for that? That's hard. So the only way I know how to scan, it's not a bull flag. So it's not it's not a squeeze. This is a different kind of pattern. You've seen it even in the metas of the world. Wow, that's not a good one. That's a good one. A rally, a hook, right at support. So whatever pattern's working, that's what I'm using. XLF. Yeah, there you go. Now, the only problem I have with XLF, and there you go, there's an inverse head and shoulders. They're right when you're talking about it. So you got the rally and the hook, you got the oversold, and you got the inverse head and shoulders. Yeah, that's a good one. The only problem with this stock is, number one, that's all of 40 cents. That's tough. You know, this whole thing, if you're dead right, is only 80 cents. You know, to occupy a lot of your emotional and financial energy. But that idea, absolutely that idea. So definitely see that. But the other thing is, when there's so many negative divergences, I have to be extra careful buying the ones that are up the most this year, because a lot of times you get that tax loss selling. So I have a tough time. In fact, I wouldn't be surprised to see NVIDIA go back to that 145. Now, we had a spread in there, and I don't mind doing it again, but we're in meta, so that one's okay. BBAI is a perfect example, and that's why I was pissed off I missed it. The rally and the hook to support. I missed it. I sure did. The rally and the hook. Now, you might say, well, it didn't get exactly to support, but keep in mind the leader sound was already going up. So, yeah, I missed it. Definitely missed it. The rally and the hook. So that's what we're talking about. So, and that doesn't mean you have to buy it on the hook. Then you look for the reversal pattern within it. Usually I'll take an hourly. So let's go to an hourly. Oh, did it give you anything? Yeah, right there. If you can connect at least 3 points of contact, that to me is a good hook. I mean, a good pattern. Now, if you don't want to take an hourly and you're like, it's right at support, I want to look for a trigger on a short-term trade, like a day trade. Well, there's a bull flag here, but that's a little extended. There's a little one here, right there. There's a little one here. More of the story, both little Stewie patterns. There. So the buy is on the break, because you don't know if it's going to go all the way to $1.99. So just, keep that in the back of your mind. That's what I'm watching. So there's a number of garbage ones that are trying to form a bottom, but they really haven't broken up yet. But with the ACHR going up, I have to respect that a lot of other ones probably are. So that's where I am. And so I'll show you the way I do it. Here's one of the ways. We have a number of ways, but let's just take FinViz and let's take a visual. Now, keep in mind, I do use squeezes like on a 15, an hourly, a 4 hour. But number one, what I'm looking for is stocks that are over their 50 moving average. That's the first thing. I want X funds. I want average volume, let's say 300,000. If something does 50,000, I can't go and buy 2,000 shares. I don't want to be 4% of the volume. So there's that. Lots of stocks. Then I want to take the stocks over the 50. Still lots. Now, I usually add optionable and shortable, but we trade a lot of garbage. So they won't be, optionable. Now what I'll do is I'll take stocks between, let's say, under 20. You can take under 10. You can do that too. There, 400. And then what I'll do is I'll go through these and see if we see any rallies and hooks. Number one, I'd like to see the more expensive in the group already going up. Like BBAI is following SoundHound, anything with an AI in it. But let's just go and look, just for laughs. There's a rally and hook, but it's that's not that good a risk reward. The other thing, you got to look at news on them all and be sure that they don't have like a secondary looming. And I'll show you a perfect example. So how many of us, you can raise your hand or something, were like, darn it, I missed NOx. Brecher said that they have a big old secondary, and then it opens up a point. And what happened? It sold straight off. It's almost unchanged. They filed for $100 million secondary where they'll sell stock from time to time. If you're the CFO, are you going to be selling stock this morning or down here? Darn right you're going to sell on good news. That's why we didn't get trapped. Didn't get trapped. So that's pretty cool to show you that. So you might ask, well, how do you find news? You go to Thinkorswim, it's free. And you go to news. And you go, I vet these things before we get in them. So when you go into nano this, because these small stocks, you got to be careful. And you go into here, and there are two things you should look at. Number one, you should see if they have a secondary. So when you go through, let's say the last 6 months, does anybody see something? An offering sales agreement relating to the issue from time to time of 100 million shares. That's a ton. You got to look at that. The other thing, I can't tell you how many slimy analysts are out there. The slimiest firm of them all is AC Wainwright. You will see amazing amount of AC Wainwright where they'll say things like, they'll upgrade it with a $100 target. It's amazing. So don't look at AC Wainwright when you see this. The other, if you want, because it works pretty well, you go into this. You look at Cantor Fitzgerald, and then you go to Ross Osborne on tip ranks on the bottom. If he's like last out of 9,000 analysts, you don't listen. If it's somebody that's like really hot, sure, you can listen as long as you combine it with a chart. But I'll tell you right now, when they are selling stock like I showed you, right here, controlled equity, who do you think they're going to use as their firm to sell the stock? They're going to use the companies that are kissing their butt. How much you want to bet Cantor Fitzgerald to sell them the stock for them? I'm just telling you, that's the kind of stuff I see. So just keep that in mind in there if you ever use news. But when you go to news, you got to look at them as a group. Now, you could look on FinViz, but usually they won't show the secondary stuff. It's all positive stuff. But here you go. So there's an NCL. What the heck is NCL? So you see that hook. Now, the more gradual the hook, the more likely it is to work. You would rather it look like that, like a bull flag. So I'm just telling you, I'll go through 41 pages of this for our subscribers and try to find them. So it's not that easy. Also, if I see something like this and the most I can make is 8 cents, I'm not buying. but this is a great scan. I can just share this. It's just free. Now, we have proprietary scans on Simpler that work great, but that's one of them. And like I said, I'm not looking at the AMDs. I can't give recommendations for sure. There's a screener for you. Like I said, I'm not taking something with a big secondary. Soundhound. Do you buy it here? Nah, not really. But just to tell you the environment, this has had 8 million positive articles. We're in a speculative time that's more likely to work. That's all it means. Is it extended? Yeah. Do I want to short it? No way till I see a reversal pattern. Usually we want to see a reversal followed by a consolidation. I'll show you. There's a reversal followed by, well, here it was really a 1 minute chart. It was almost impossible. It happened so fast. In fact, that's one reason we didn't do it. It just happened too darn fast. But theoretically, you want the reversal and the consolidation. This didn't have much of a consolidation, it just went straight down. Ideally, they go up, they do this, they try to test the high, and they form a defined trend line. So you don't see anything like that in SoundCloud. I'm not going near it on the downside. In fact, I'm going to use it as a tell for the rest of the garbage. So just keep that in mind. So all I'm doing for everyone is constantly scanning. So when you go into these, I'll show you some examples. So we have a big list of long stocks that I keep sharing in our group. There was a hook right at support. We were in it there. So just keep in mind it's risk reward. Oversold at support in an uptrend. So it worked. Right there, you're looking for the reversal pattern. Like I said, I know a lot of people in this environment are getting bailed out when they buy on the way down. Just keep in mind another thing. I know you see on Twitter everybody bragging. 100 sites bragging of how much percentage gains. If 100 sites are bragging about how much they're making, how come 95% of day traders lose everything? There's a disconnect. So I'm just telling you, the way to do it is slow and steady. But if something does have a defined bull flag, sure, you can trade it bigger. But you buy on the way up. You buy on the way up. But I'm just in awe of everybody on Twitter bragging. I'm telling you, look for the content. Look for who posts a ton of content and then see if that you can learn from that. So I'm just telling you, in the long run, I've seen this in 2000. I saw it in 1987, 89. I saw it in 82. I'm just telling you, I see the animal spirits and I see all the bragging on Twitter, and I see for some odd reason still 95% lose money. So it definitely helps to hone your techniques. Wait for those bull flags and wait for the correct market environment. Right now, we're in the correct market environment. So those kind of patterns are more likely to work. So over these, we're watching a ton of these. So I'm going to go through them and you tell me what looks like it could be ready to pop. Don't say that one. Yeah, it's already gone up. So all right. Could that go up? So we're just going to take this and you'll see it, I think, a mile away of what looks like it's ready to pop. Now, what's the problem with CXAI? The resistance. That's not that big a move. So, and if this can't go up more with SoundHound AI going up, I wouldn't touch it. But here's some others. Does that have a bull flag? It sure does. And we're in it. So we're in VSTE with the little bull flag at support. So it had the hook, the rally, the hook, but now this is a lot more constructed chart. I have no idea what they do. So, but that kind of idea. There's one. I've never even heard of this stock. So you get the sell-off, the two support, and now you're getting a possible bull flag. So yeah, you're right. Just to let you know, I have seen that there's a tremendous amount of one-day rentals of Lamborghinis lately. One day, so they can take pictures of them. So, or their beach house and all that. So the other, if you see somebody that's not like obsessed with trading like me, and they're like, I'm buying this while I'm at the beach, I wouldn't follow them. All right. Rally and the hook. Look at that, right to the zero line. Isn't that amazing? So where do you buy it? Does everybody, I have no idea what they do, and I'm not in it, but where do you buy that? So as you see, if you bought on the way down, you were gagging at 65 cents. It's a better buy when it forms that right there. Now I know it, but it sold off, but you had a backstop. You buy it versus, let's say, in here. You're risking 10 cents. If you bought it on the way down, you were gagging. So let's take some more because I'm looking at these for our clients. I missed that one. But look at that. Bull flag on the way up. Bull flag on the way up. And this is how we find a lot of these. Just, homework, grunt work. How about CLDI? Yeah, not bad. Now, keep in mind, a lot of these on this rally, biotech stocks have a habit of then doing secondaries. So they do secondaries because they're developmental companies and they need the money. So, look, they stuffed a secondary down your throat on that rally. So I'm just telling you, I also look to see how much money they have left. Now, NNDM, we're very interested in, but they have a big shareholders meeting tomorrow. So that's a big problem. If the shareholders meeting's a non-event, that bull flag could break, which breaks a bigger bull flag. The only problem is it doesn't move that much. So, but this is what we do. We just go through and we'll scroll through, and these have all been developed from Finviz. So here you go. VCIG, do you buy it? Well, look what happened on the rally. Offering. Look at the bottom. Where did they negotiate the price? The stock was just 7. Look where the price is. They did it at $1.87. That's not giving you a lot of confidence in that stock. So I'm just telling you, definitely look at the news. And you'll see some of these probably look a lot better than others. We're in AISP. Why are we in it? Because the companion stock's going up. Do I love it at this price? No. Do I like it? Yeah, that's why we're in some. It's a companion stock to ACHR. It went down because ACHR went down. But it just doesn't have the oomph yet. So we just go through them all. We'll go through them all. But that's how we do it. So does everybody see that even though it's tough, it was a better buy on that little inverse head and shoulders because you were playing the way up? Remember, if you only have $10,000 and you want to buy 3,000 shares, you better buy it when it's on the way up or you're going to miss other ones that are moving. So we've seen that a million times. So like I said, I hope that helps. Now I'll show you one more watching. I'm not saying to buy it. I have no idea what they do. Here's your IMG. We bought a tiny amount up here. We're down money. We're down $50. All right. Where is the area where you're looking for the big revert? There's a good buy. On the other hand, you might get that twerk first to right here to 70. In that area, maybe I'll buy some on the way down, but I have no idea what they do. That's why I only bought small. So that's just something to keep in the back of your mind. And that's where I am at the moment. So just to let you know, yes, sir. Yeah, I'm going to call you out. You don't advertise other sites on here. So you get banned. You get banned. Don't advertise other sites. And remember, you're talking about how many lose money. Like I said in here, we're in historically a strong time. So that's why I'm looking for long ideas. Now, another thing, when I trade these garbage stocks, you better be sure the most expensive are still exploding. If the most expensive are going up, then it's more likely the cheap ones will go up because somebody is loaded with money and all their profits here, they'll go for the cheap ones. If these are all going down, then the other ones are less likely to go up. Little trader trick for you. So I'll show you like this. Yeah. When that sold off the last couple of days, so did GME, so did all of them. So people do look at a lot in the groups. Like why isn't this going up? Well, I'm telling you right now, this is national vision. You also have to look at the news. They're closing 39 stores because of slow growth. I'm not going near that. So that's why I like to buy on the way up. Actually, I'll give you another trader trick. So this is pretty cool, I think. And we do this a lot in Chart Patterns Mastery about the tape reading. Now, you don't have to do this because you might look at every little tick. But I have up a ton of these. I'll show you what we're talking about. I'll have up I'll take the leaders. I'll show you the method to my madness here. I'll take the leaders. So we're going to switch this to level 2. Now, don't look at like if there's 5,000 on the offer. People screw around like that. But then what you're doing is you're looking for, and like I said, not the actual bid and ask. What you're doing is you're looking to see if it's moving a lot. And that's what happened when it was sitting around 720. All of a sudden, you saw a tremendous amount of time in sales. See that? See how much it's whirring. I call it whirring like a clock. See that? That's exciting. So I'm just telling you, we have up a lot of these because out of nowhere, you'll see one of them start to have a lot of volume. And then you'll see other ones like that IMG that just isn't trading. And that's what I'm telling you. You buy on the way up. So if you see this out of nowhere, just trade a ton of trades right in this area, like 80, 81, 82, and you see like just a lot of trades, then yeah, you could look to buy it. If it's just drifting, who's going to take it up? So I think that's pretty cool to have a level 2 up there. Now, AMD. Now, I'm not going to tell you if I'm going to buy it or sell it, but I love being directed to charts. So what do you see in here? Well, number one, look over here. Russell down 15, transports down, bonds down. It's a big divergence, but at this time of year, that can go on a long time. I see exactly what you're talking about in advanced micro devices. Like I said, the only problem with a stock like this is that at this time, there's a lot of negative divergences. On the other hand, if this gets going, there's no resistance till up here. So I see what you're talking about. On the other hand, I wish it wasn't already overbought. I would like to see how that overbought is worked off. Is it going to go down to here and then form a bull flag? So that's a good idea. I like that. The other thing you got going for you, trade forever, is that it could be a tax loss selling candidate. Not from the beginning of the year, but in here compared to a lot of semis. So yeah, I see what you're talking about. So in fact, I'll show you something else that probably saved the butt of a lot of people on our site. We've been watching this, a 4-period time frame to do our day trading. And Jack, how many times have you seen this work? I posted it as it happened. When the ES got oversold on a 15, for day trading, we use hour, 15, 5, and 1. When this got oversold, it's how it works off the oversold. Number one, it worked it off by going right to the support. Number two, it sold off to support. Number two, it worked this off by going to a new high. It didn't form a bear flag. But how much you saw that work? So, and you saw it work. So the whole point is you need this oversold and form a bearish pattern if you want to be bearish. You don't have that yet. So I use hourly, 15, 5, and 1. And just link them. Just link them. And that way you could see them. This is for day trading. If I'm trading a swing trade, like a sound, I'm going to make it a weekly because I want to see where resistance is. No resistance. A daily, a 4-hour, and a 1-hour. There. That gives me a perspective. But for day trading, like I said, hourly, 15-minute. You saw the bear flag, bull flag there. Bull flag above resistance. 5-minute, 1 minute. So that's how we try to do it. There, now we got this. Look what just happened. Look how many trades out of nowhere in this IMG. I'm not saying to buy it, but look how many trades. Remember, this didn't have any trades for about an hour. And then all of a sudden you have that. That's the kind of stuff I look at, but on the way up. So if these were all at 80 cents and it went 80-cent bid, I'd look to buy it at 81 cents. That's the way I trade this stuff. On a garbage stock like this, I don't have a lot of it. So that's where I am. And like I said, I can't give opinions on individual stocks. I can give opinion on a chart. Oh, there you go. 15-minute looks bullish, except it's a bull flag against resistance. When I see that, the first thing I want to do is look at a longer-term chart. If it's in a longer-term downtrend, a bull flag is much less likely to play out in a great way. So after that, I wouldn't trust a bull flag. But let's look. Still in an uptrend. So yeah, maybe. How about here? Where's the resistance? Over this? Yeah, maybe 54. Is it worth a point? That's your whole problem. It was a lot better buy with that tight a flag over things. So I'll show you. When I play like an hourly, I like the ATR trailing stop, not the 20. You could leave the 20 up, but look at the bull flag over the ATR trailing stop. Right now, it's got a possible bull flag under everything. So I'm much less likely to want to play it. And that's the big problem with some of the stocks I like, that they're barely at the 50. So, I mean, I'm watching them. I just don't see the play at the moment. You see, there are a tremendous amount of stocks down. So there's a lot of negative divergence. But like I said, at holiday time, that can go on a long time. So you got the advanced decline down. You got on both. Yeah, that hasn't worked lately. You got the put call in the hole. That hasn't worked lately. Why not? Because you're in holiday time. Just seen that a million times. The chips down, the put call down. You know, the advanced decline down, the Russell down, the Dow down, the transports down. But at holiday time, this can go on a long time. So just keep that in mind. But Claire, I'm just telling you, though, that's why I like multiple time frames. Let's go back over it. So the big problem with GM, I would like to see that kind of bull. Look how it failed here. It worked for about a quarter of a point. Bull flag here, much better because it got over things if it breaks. If this breaks, it's going to hit resistance. So now I'm going to miss things. I miss a million things, but at least you see the probability of what's going through this thick head of mine. So take care. Thanks for listening. Talk to you later.